Good afternoon, everybody. My name is Scott Moskell. I am with a partner at Burns& Levinson, one of the co-chairs of our Cannabis Business Advisory Group. And I'm here with my partner, Katrina Skinner. And we are prepared to hopefully educate and maybe even entertain some of you over the next hour in our series of cannabis banking and cannabis finance and financial services webinar series. We're just going to wait for a few more folks to join as we've opened the doors. So give us about a minute or two and we will start. Maybe while everyone is logging on, this might not be a bad time for me to just give the obligatory intro to Burns & Levinson, and then we can jump right in with the introduction of our guest speakers or panelists today. So Burns & Levinson is about 125 lawyers. We're based in Boston, Rhode Island, and additionally, we have an office in Denver now with the addition of our partner, Katrina Skinner, who we're very thankful has joined us. Burns & Levinson has been working in the cannabis space since 2013. And so I know for those on the West Coast, we're just a child, but certainly on the East Coast, we're one of the older grizzled veterans of this world. We represent a wide array of clients in the space as part of sort of this ecosystem that we keep talking about. So we represent multiple operators, some MSOs, multi-state operators, some regional, and some just starting off and early stage companies. We represent a significant amount of ancillary companies, lighting, packaging, butane, et cetera, et cetera. We've also carved out a specialty, I would say, in the financial services world. So myself, I was in-house at a bank. Katrina Skinner was in-house in a financial institution previously. So we represent multiple independent lending sources that are providing some type of lending to the cannabis space. Additionally, and this is sort of the topic that we are here today to talk about automation, we do represent some or few, what I would say, financial institutions that are in the cannabis banking space. So that would be banks and credit unions. And what we are here today to talk about are the ways in which banks and credit unions can compliantly take deposits and provide other sorts of depository treasury services. But more importantly, we're here to talk with a group, our four guests, about who each have an automated platform to assist banks, financial institutions, actually the government, I should say, in their review and their making sure that what's coming into their financial institutions it's all compliant, I should say. So why don't I just start in, because we have a great amount of content today and our guests are incredibly interesting. We are going to wait for questions to the end. If we have time, we will read them and answer them. If for some reason we don't have time, please still provide questions and the panelists will provide email responses after the fact. So with that, I think, Katrina, are you going to introduce the topic or do you want me to introduce
Why don't you go ahead and introduce some of our panelists, and then I'll go from there as well.
Got it. I should have had a script. Anyways, Emma Ponich is a leader in the BSA AML compliance and cannabis banking space. He was a senior executive at a community bank in Washington State for over 20 years and has in-depth knowledge of the banking industry and banking requirements for high-risk industries such as cannabis. He now serves as president and chief operating officer of Shield Compliance, a Seattle-based fintech company that has designed a platform that automates the compliance process and gives financial institutions the operational structure they need to monitor, measure, and control cannabis banking. So thank you, Tony. Next is Ryan Kanan, He is the CEO of DocFox, a digital tool which automates BSA or Bank Secrecy Act for business account openings and ongoing due diligence for high risk and complex accounts. DocFox currently works with over 160 financial institutions to reduce manual effort through advanced document processing with document inspection, data capture, and comparison of any document. DocFox recently applied this technology to help a California bank to go live in 2 days to enable fully online and automated SBA PPP loan applications. Banks and credit unions use DocFox to enable online account opening for business banking, banking across state lines with comfort, banking high-risk industries such as cannabis, or simply streamline business banking back office and BSA requirements. So Katrina, on to you.
Okay. Like Scott said, all of our panelists today are leaders in the technology space, and that's what we're going to look today through cannabis banking through technology, or the lens of technology. And I just wanted to thank some of our guests who are attending. We've actually had the pleasure of working with before, and some of the panelists I've had the pleasure of working with and have worked for me as well before. And now we're bringing on new resources so we can make sure that we understand the space throughout the country. And that's another thing for the attendees to understand is each of these gentlemen who are on our panel today are in a different part of the country, and they work with different financial institutions throughout the country. So you're going to get an interesting perspective from all of them, from East Coast, West Coast, and Central as well. I'm going to go ahead and introduce Adam Crabtree. Adam is in Denver with me in our neck of the woods, and Adam is the founder and CEO of NCS Analytics. Before NCS, Adam told me he is now a recovering banker. So he had a successful career managing sales, compliance, and operations at a Tier 1 bank. It was there that he recognized the need for better solutions and more advanced tools to address high-risk areas. So in 2015, Adam launched NCS, and since has grown it to support governments and financial institutions across the country. So he's going to bring a unique perspective from that area as well. Currently, NCS has over 1,700 licensed marijuana businesses under continued monitoring, and he provides one of the largest and most diverse data sets in the reg tech industry. And finally, last but certainly not least, is Mike Kennedy from Green Check Verified. Mike is an entrepreneur who is focused on the intersection of technology and consumer compliance. In 2017, Mike co-founded Green Check Verified, which is a regulatory technology company that offers solutions for financial institutions that want to safely and profitably bank legal cannabis businesses. Green Check Verified was founded by a team of technology, banking, and regulatory experts, and they focus on the intersection between community banking and the emerging legal cannabis industry. Green Check's goal is to provide the services and tools needed to connect these two industries. So with that, welcome everyone. Thank you for joining us and being willing to engage in this dialogue. And we're gonna try a new format today where we're gonna ask them questions, but we're gonna let our panel educate and share their insights into what they're seeing, especially from a technology perspective. So again, each one of these gentlemen and their companies provide automated solutions to help bank cannabis compliantly. FinCEN's latest report, which was at the end of first quarter 2020, showed that financial institutions entering into the space of cannabis banking has pretty much stayed the same for a year, if not slightly declined. So each one of these guests is going to kind of give us some insights on why they think that may be happening and where it may be going. It's a tough space to be into. First of all, it remains illegal federally. Marijuana does, so that's the first challenge. Then there's relatively few guidelines for financial institutions who are interested in the space. The guidance issued by FinCEN was issued in 2014 and has not been updated since. And depository institutions who are interested in the space also have to understand the patchwork of cannabis rules and regulations throughout the country, because that's one of the requirements. So, and not to mention 2020 and the coronavirus pandemic has turn most banks and credit union strategic plans upside down. So we're going to start with this question, and Tony, I'm going to put you on the hot spot with this one, but
Thanks.
why would financial institutions, considering all of these challenges and getting into the space, even want to get into cannabis banking right now?
Yeah, Katrina, thank you. Thanks for having us today. Well, I think you have to look at first, why were people originally looking at cannabis banking? And it was pretty much a deposit strategy, right? So we had banks on the West Coast and other parts of the country that had high loan to deposit ratios, rising deposit costs. And they looked at this as a good deposit strategy, willing to take on those other headaches that you talked about and learn all the things they needed to learn. That's changing now with coronavirus, right? And so we do know that this portfolio provides good non-interest income. And as we talk to our bankers, I mean, we're looking at a time where expenses are increasing pretty rapidly for our financial institutions as they mitigate some of the things going on with coronavirus, but also as they begin to fund their loan loss reserves. And so non-interest income is becoming a really important aspect of taking on this portfolio and may help them to offset some of those other challenges going on the P&L. We also see that we think there's an opportunity for some banks to enter lending. As we get further into this year, we think earning assets, the creation of new earning assets for banks is going to be pretty challenging. And so we think for the same reason banks stepped up and got into deposit taking out of necessity, either because they had very slow, lethargic deposit growth or they had rising deposit costs and high loan demand. In this case, they've got probably slowing loan demand. They need yield on earning assets. That may encourage them to actually get into cannabis lending. And so whether you're in deposit taking, earning those non-interest income, you're collecting a lot of data to support your BSA AML compliance. We see there's a potential to also leverage that to help mitigate credit risk. So I think there's still a good opportunity to enter this space. And, but the motivators are definitely changing as the challenges for the banks are changing.
Ryan, is that something that you're seeing as well, or from your perspective, why would financial institutions get into this space?
So I would say that I wouldn't recommend it for every financial institution, right? So I think it depends on the FI and on the financial institution in terms of their setup, in terms of whether or not they have the resources, to be able to invest, not just financially, but also sometimes in terms of experience, right? And if they're prepared to invest the time to actually build out the BSA program and everything else that's required operationally in order to bank the space. I think one of the things that we've seen recently with institutions that we've worked with in the last quarter, for example, to come online, is organizations that had already started the ball rolling at the start of the year, who have set up, let's say, independent teams, or typically who have tasked a particular individual in the bank with the full-time role, which I'd certainly recommend, of managing this portfolio and essentially setting up all the operational and compliance requirements, have suddenly found that actually they actually have the space now to create, right? And they actually have the space now to go, all right, well, we often, a lot of those BSA teams are working remotely, and they've suddenly now said, great, we've got the time now to focus down and get it done right. The cannabis space has not shut down. If anything, it's probably grown during this time, during this period. And so that the idea is set, great, we need to focus on innovating in terms of how we engage with our customers. There's a lot more time that's going into thinking about how we can deal with BSA remotely, how we can enhance all of our programs. And so we've actually seen that for institutions that already started the ball rolling, they've typically accelerated their process. And so we've worked with a number to do that. And I've also seen some institutions where they were maybe concerned coming into this period and have now been put under huge amounts of pressure, either because of the SBA loans that they've been working with, if they were one of those institutions, or just who've been put under financial pressure to say, let's just put on the brakes for a moment and reassess, to see how we're doing. So I think I've seen both, in the market, but I definitely think it's worthwhile considering, more generally speaking, how you're dealing with your high-risk accounts in a remote world, and how that might apply if you're already doing high-risk accounts to what you might be able to do with cannabis banking too. Because I do think that cannabis banks are an extension of high-risk banking accounts, right? It's not like a totally brand new category which has, which bears no resemblance to any other high-risk accounts that one might see.
Yeah, Ryan, and if I could jump in, as a a fellow non-recovering banker on the call like you, I think we see things a little differently, right? And so to say it's not for every bank might not be music to the audience's ears, but it's true. Another thing that I think is pushing more banks and credit unions to begin serving these businesses in their community is that they're starting to measure the cost and risk of having a cannabis no policy, right? So these BSA officers that maybe are ill-equipped to manage the risk associated with serving cannabis are equally as ill-equipped to monitor and detect whether or not they even have cannabis businesses in their portfolio already. So without creating a program where you can start to bring in some revenue and offset some of the costs of that additional monitoring, you're really left with, just that additional costs. And so what we're seeing from clients across the country is that there are certainly some institutions that are looking at it the way Tony described. This is, a financial strategy that we're going to tap into. There's another cohort of institutions that just, they're community banks and credit unions largely, and so it's in their ethos to serve these business members. But then there's the third, which are sort of stuck between a rock and a hard place, saying, I'm going to have the cost, I'm going to incur the risk. What happens if come exam time, my regulators are able to find cannabis businesses that I overlooked? I may as well create a robust compliance program so I can welcome those businesses into the appropriate monitoring processes, and then, of course, charge and grow deposits accordingly.
And Mike, if I can follow up on that, I think that's really interesting and quite true in terms of how pervasive the cannabis industry is throughout the banking system. So I was talking with a client, which is a financial institution not involved in the cannabis space, and she was discussing how they have some loans, real estate based, where the borrower is leasing space to a cannabis operator, and they know that. And so there is cannabis money going through the financial system, regardless, if they have a true cannabis banking program, and that creates other wholesale issues. So for instance, she was saying on this particular loan, they were having difficulties getting title insurance on the loan that when they made it because of because one of the tenants is, cannabis operator, and they're paying in cannabis money or based money. And as a result, they were concerned about, well, what happens, after they make the mortgage or whatnot. So that's just one example how the dominoes can fall, and why I think it's unrealistic for any bank at this point in any state where cannabis is legal in some capacity to think there isn't cannabis money flowing through their financial institution at all.
And Adam, you work with the regulators and local governments. What are you hearing from their perspective right now?
So I would say that one of the bigger impacts that we've seen during this pandemic, and part of it is because of the WHO's statement early on, we've seen a transition away from cash. And so there has been a pretty dramatic rise in the want of banking. The consumers don't want to use cash. Businesses in general don't want to take cash. I'm not sure about where you guys are at, but Denver has gone essentially cashless in most areas. The only issue with that is, for the most part, those platforms require a bank account for it to land in. And so it's driving up that need. And then to just kind of couple on a little bit to that first question, I think that Ryan is correct that your BSA departments will be probably a little bit more free than they previously were. As to add on to Tony's statement, the loan pipeline is going to slow down. It is part of this unfortunate side effects with the unemployment. Loans are going to be more competitive, which is going to compress your spread. So this could be used as a way to not only generate some of that, but on that community banking focus, it's a way to open up new clientele. For the recovering bankers on this call, I'm sure you all remember workplace banking. You land a new business and the first thing you do is go buy their entire staff lunch, set up in the break room, try and bring in some of those new accounts, figure out where those needs are, and really increase your footprint and your presence just beyond that business. So this can be a tool to help offset a holistic perspective on your financial institution to deal with some of these pandemic related issues.
I think Adam raises a good point also, as you're building out these policies then, don't just consider the policies that you're going to have for banking the licensed client, but also for those W-2 wage holders that make up the total cannabis enterprise. And how does that impact your consumer loan portfolio, your mortgage loan portfolio? There is opportunity there, but you do need to be able to address in your policy how you view those sources of income.
No, that's a good point, Tony. I mean, I think people forget that the operators employ actual human beings and they need their own. I mean, you know, the average worker will need a car loan. The average worker will need a mortgage. The average worker will need maybe a credit card, line of credit. These are all financial services that they may not be able to obtain if they went to a different financial institution that doesn't have a cannabis program, or if, you know, or they might put them through too many hoops and make it more expensive, give, you know, a higher interest rate. So I think for financial institutions contemplating getting into the space, you know, it's not just a non-interest income, you know, from the deposit monthly fee. It's also, you know, all the various other types of programs and income sources that derive from it.
And it also helps the communities, especially, I mean, these frontline workers in most of the states, they were declared essential services, right? So these people are going to be putting their money back into local communities. And right now, I know throughout the country, you know, local economies need these people to continue working, continue spending, that sort of stuff. So it helps that small circle. So maybe it's not, you know, can't save the world, but you can start in the backyard type thing, right? So Mike, what are you hearing out there from financial institutions? Do you see some interest, or is it, you know, I mean, just those ones like Ryan said, if they had started it, they're going to continue carrying the ball forward, but, or are some actually starting to consider it right now?
Yeah, I mean, look, PPP sucked the air of most rooms, right? That was the primary focus, and it needs to be, right? The economy needs financial institutions on the front lines deploying this capital. And Ryan, I'm sure there are BSA officers on the line, or Adam rather, who are saying, you know, what, downtime? No, with all the unemployment fraud, there's plenty of work to be done. So that definitely is taking some focus away from the conversation, I would say. But the looming reality is that familiar sources of liquidity, while they may be, you know, strong now, are not certain in the future, right? And there are, you know, early indicators that the deposit growth that U.S. banks and credit unions have been seeing for, you know, the last several cycles is getting ready to really decline sharply. And so finding opportunities now to not only replace those funds, but do so with less expensive sources of capital, and then also increase fee revenue along the way, is necessary so that these community banks can continue deploying capital into the economy. So we're seeing interest from a pragmatic standpoint, people who see the writing on the walls and maybe weren't already working on the initiative, but now have decided to fast track it. You know, I absolutely agree with you, Katrina, that strategic plans are upside down right now, which causes a fresh look at things. What I will say is that across the board, the theme that we're experiencing, and I'd love if the panelists could weigh in, is many more stakeholders are coming to the table already educated on the landscape, on the risks, on the opportunity. I think that there's no shortage of information that can be found out there. There's certainly some, you know, that you have to sift through in order to get to signal through noise, but the majority of the conversations that I'm having now versus a year ago are certainly much more germane to the actual activities of cannabis banking, and not the, you know, academia behind can I do it or can I not.
I would agree with that. And I would say the other piece that we're seeing is the bankers are much more aware of the conditions in their individual market. As you know, the way this licensing has occurred from state to state creates very different economics for operators and the opportunities for the bankers. And so where maybe previously a year ago or 2 years ago, they'd hear stories from their friends or sort of the academic level, but didn't really understand that the licensing regime in their state was creating a very different condition. I think they're much more aware of that now and tuned into those state-by-state differences and the opportunity that presents to them.
Adam, are you seeing the same thing?
Yeah, I would wholeheartedly agree that the individual states and their regulatory climate has a massive impact on banking. We see the gambit from public-private partnerships in certain states where they're actually going out of their way to help facilitate banking, all the way down to states that can't even necessarily get their regulated market enough under control to really get to the level of comfort you would need. There's some sort of a social contract between the regulators and the financial institutions. Each has expectations of the other. Some are doing a phenomenal job at that, some not so much.
And Ryan, just out of curiosity, on average, what do you see the sales cycle for some of these? Like if they're coming and they're interested in the space from start to finish, just on average, what do you think it is? How long is it in your experience?
So we supply a tool, right? So we don't offer any sort of advice, and we don't offer consulting in terms of the actual program. So typically what would happen is sometimes we might encounter an institution in the early stages, and we're happy to tell them what they should be thinking about down the line in terms of what kind of platforms, what kind of automation tools that they would benefit from down the line. So we would often be kind of like a person they would talk to while they're kind of still having the discussions with the board and actually assembling their program. And then usually they would kind of revisit us once they've actually taken a decision to say, great, we've either built a program or we've worked with an existing program provider out there, and we're now ready to, let's say, go in and start our automation. We've seen institutions that are 18 months still into the process, still trying to make a decision and decide where they are. We've seen some institutions on the other side rather scarily get into this within like months, and suddenly have an aggressive ramp up. I'd say probably somewhere in the middle is probably best. But I suppose the one piece that I would really recommend is, I'm not sure, just as I mentioned, we deal with BSA across all different walks, right? So cannabis and high risk is one area or application, but we work with many institutions. The one thing that I would just advise in this space that we've seen is there's a tremendous benefit from not going at it alone. So there's many institutions out there that are doing this successfully. There's many tremendous advisors and groups that have got huge amounts of insight that have been doing this for years. And I would just really encourage to reach out and get experience share and leverage services teams out there who've done this before that can assist to actually build out a program. Because the one thing that I would say is, certainly if you're not currently banking high-risk accounts, there's a massive jump from, let's say, just opening up regular retail accounts or even just traditional business accounts to banking the high-risk space. And so I would just encourage the kind of reaching out to institutions, advisors, organizations that can work on that, ahead of it. Because I think that otherwise, if you don't get it set up right in the beginning, I think you can, there's tons of challenges that then crop up down the line, which could have been avoided.
Yeah.
What kind of let's say, what kind of issues are you seeing these financial institutions pose? And probably more importantly, what sort of non-obvious issues? I mean, obviously everyone is concerned because of the federal illegality of cannabis and those difficulties. But Ryan, Tony, Mike, Adam, maybe you can comment on sort of what is a common theme as to what's an impediment for these FIs to kind of enter into the space.
Scott, I think one of the things that we see a lot is it's often overwhelming once you get into it, the amount of effort and time that has to go into administratively burdensome tasks. And I think that if a kind of healthy infrastructural service isn't set up in the beginning, then what I think can very quickly happen is that teams can get totally overwhelmed if they're trying to take this all on with between the back and forth, the amount of information that has to get collected from clients, the amount of effort that goes into the upfront due diligence, the challenges that they may not have been used to when you've got complex structures and you're suddenly getting, documents and formation documents, and you're going, who's Bob? Who's Linda? I've never heard of these people before, right? And then suddenly you're having to go back and ask the questions, and you realize you haven't truly found out who the ultimate beneficial owners are. And what I think tends to happen is that and then of course we haven't even spoken about the ongoing work and ongoing due diligence and monitoring of the accounts and everything else. And I think that one of the things that maybe is not obvious is the amount of time that then distracts from being able to actually apply your discretion as a BSA team and to be able to actually get to know the clients much better. And at the end of the day, we've always advocated to say, don't waste time on admin. Rather ensure that you can apply your time to truly getting to know and understand the client. Because if you can truly understand the client, it's the best possible way to understand what is and what is not suspicious activity. So if you're talking about transactions and accounts, the only way to truly be able to identify what accounts are in fact suspicious, because of course context matters, right? So if you've got a person who's, let's say, employed in a local business, and they're getting they're making a $50,000 wire to China, that's probably maybe uncommon, right, behavior. But it could be that if you understand a particular business, if one of their main suppliers is in China, well, then there's nothing uncommon about it. And if you understand their business strategy and where they're going, and they, you know them well enough that you understand their business plans, so then a lot of these things can be anticipated ahead of time. But that takes time, right? And that takes investment in terms of the relationships. But it also means pre-planning ahead. So I would say that's one of just the time sink in all these tasks. I would say is one of the factors we see.
Yeah, and you hit the nail on the head, Ryan. I mean, the reason that all of our solutions exist is to free up that administrative burden, right? It's to allow BSA and compliance and risk officers to do what they do best. And I think it's worth pointing out that has cross-cutting concerns, right? If you have, the emotional owner of the program, whether it's in compliance or risk or, somewhere closer to the business development side of the shop, that person who deeply understands each business is not only good from a risk management perspective, but also from a growth and opportunistic perspective as well. Because now you're in a better position to predict your portfolio's needs, to be able to better tap into, we've been circling around it, but there's a network effect, right? I mean, Adam, you see this at the licensing level, right? Whether the insular nature of how these licenses are awarded drives it, or just the scarcity of services and the tight-lipped nature of this industry. If you work with a grower, there's a high likelihood that you'll be able to work with all of that grower's customers as well. And so by focusing on the relationships, you're not only building and strengthening your controls environment, but you're also leading to a larger upside for the financial institution and being able to provide more value to the cannabis community largely.
I represent a lot of operators, and let me kind of do the flip side of that. I mean, you're all basically saying you need to know your customer, which, well, obviously you have to, but know your customer very, very well, understand their business plan. But from an operator perspective, and representing some of them that have gone through sort of the onboarding process, they want to keep that information very tight to them sometimes. And or more importantly, with the need to disclose beneficial, who actually owns the operator, there's a lot of concern about disclosing those names of the owners, the equity holders, even though obviously the bank has certain privacy requirements. And, obviously I'm seeing this from a different perspective. I don't know if that has been sort of a common lament that you might have heard.
What's the concern? So just ask, what do you typically see the concern as being?
So a lot of operators just don't want to give as basically all the information that the financial institution needs to do the onboarding. And with that, and more importantly, so a lot of times the investors are, folks who live overseas potentially, or just don't want to have their names out there at all, even to a financial institution. And so we had a situation where one of our clients just did not want to give any of that beneficial owner information over to the financial institution, even though, it is, the financial institution has privacy laws imposed upon it. And I'm just kind of, it's just a different, sort of on the flip side of maybe what the FIs are seeing or dealing with.
Yeah, and Ryan, just to give a little bit more context, there's also a highly competitive aspect to this industry, and a lot of the operationally focused documents are considered proprietary and
Yeah.
you do have some bad actors who are trying to, leverage that information and even on the sales side as well. So I definitely can kind of assimilate with that.
I think that it's on the bank though and the financial institution to encourage the transparency, right? I think that part of the issue is that the industry is so clandestine, right? Is that it's so, and I think that and part of what I think the operators are wanting to do, right, is to say, but hold on a second, we're a legitimate industry, like we're legitimate businesses. And I think that that's why I think this dialogue is so important, because I do see that financial institutions have an educational role to play, which is to say, but let's unpack why, right? I mean, we're not an MRB. We don't have anything to do with cannabis, but we had to disclose to our bank, who are all our shareholders. And I think that the question I think that it's on the financial industry to encourage the transparency and to talk about, but hold on a second, if we're looking for legitimacy here, then part of that comes with transparency, and not that kind of like, the kind of like clouded, mysterious way of doing banking. So I think it's about asking the questions, which is to unpack why.
And just to add on to that, since I am probably the data monger here with 1,800 MRBs under constant monitoring, I would say that, as Ryan said, it's all a conversation. It's helping them to understand why it's needed, and more importantly, what you're going to do with it. That data is proprietary. It is their blood, sweat, and tears. They have built their methodologies, all of those kind of things. So they need to have a level of comfort that their data isn't going to be published anywhere. It's not going to be leaked. They're not going to allow it to go outside of what it's intended to be used for. But if there's the conversation of why it's needed, that, hey, we need to understand this so that we can provide you those services, we can help you, here's how it is. It all starts at the first time you meet with those clients. You set the expectations, you help them to understand, and honestly, there's times that there's just not a fit there. If they aren't comfortable with sharing the data, then it would be hard for a financial institution to get comfortable taking those funds.
Although paradoxically, is that a word? Anyways, paradoxically, we'll make it a word if it isn't. When these operators apply for their license, basically they're giving the same exact information, if not more. And those applications sometimes are made public, although redacted, but they are subject to FOIA requests because they are public document given to an agency. So yes, it's going to take a long, long time for someone to dig through and do the FOIA request and whatnot with the government agency, but the expectation of privacy is not there probably shouldn't be as much of an expectation of privacy, all things considered, given it's a highly regulated industry.
I think it depends on the state as far as what is published. Washington is significantly more transparent than most other states. A lot of the states are now moving towards allowing the licensee to choose to share those documents with the bank, which decreases work for the licensee. It increases the validity and belief in those documents for the financial institution, allows that public-private partnership that I alluded to. So that's another one of those that's very state dependent,
Sure.
Different flavor for every market.
So, Tony, this sounds like to me the intersection between the compliance and customer service and the opportunities that are there. Do you agree?
Yeah, I think Ryan said it really well. It's an opportunity for the banks to number one, explain what this transparency gets the customer, right? By being more transparent, not only do they get access to basic financial services, but as these banks understand the businesses better, we see they're opening up more opportunities on the treasury side, other products and services that help these businesses to be successful. And just to add on, even when I was at the bank, we'd get calls up to the executive office from some customer who doesn't want to provide underlying beneficial ownership information for their regular old LLC that had nothing to do with cannabis. So cannabis owners are not unusual in their aversion to some of them wanting to provide underlying beneficial ownership information. It's just increasingly important in this space, and we usually go deeper than what we were doing on our traditional customers. As far as technology goes, I think there is an ability, if we're trying to focus on relationship management and compliance, how do we use technology to streamline the interaction between the banker and the customer? And so there is an ability for them to share information in a way that operationally fits in with how they're doing business. And in turn, the bank can use that information to then apply their judgmental decision making. In these highly manual programs that we see, that I'm sure all of us have seen, it's a really terrible experience for the banker, but it's also a really terrible experience for the customer. And so I think we have an opportunity with all of our different solutions to be able to drive a longer term, better customer solution. And as Safe Banking happens or the States Act or one of those, we will see more competition. We will see more financial institutions enter the space. So those financial institutions that get in early and figure out how to perfect the customer experience and still collect the compliance information they need will be able to retain those customers over the long haul. And that's really the reason to get in early, right? You're getting a first mover advantage. Don't lose it by creating a terrible experience for your customer.
Yeah, and that experience matters, right? Because we're talking about depository services mostly, but what we focus on is using that experience, creating that sense of security and transparency. You really can get a lot of leverage out of that action of providing that level of disclosure. Right now, you can shop around for insurance products. You can look at different sources of capital, payments. Right, there are a number of sort of overlapping and financial or quasi-financial services that require the same level of disclosure. If you can create a robust experience that is secure, trustworthy, and transparent, then that operator can now get access to additional business services that they need to grow, which is a transitive property, yes, but certainly due in part to working with your financial institution.
That's a great point.
So, Mike, let's talk about automation. What type of tasks do you think should be automated versus left to humans?
Yeah, so the way that I think about it is you have really two categories. You have robotic tasks and mindful tasks. There are tasks that, as the name implies, can be done by a robot. They don't require instinct. They don't require background. They require Boolean logic, true, false, system to system, ideally. But really, the majority of the work that all of us do, I mean, even myself, and I'm a tech entrepreneur, falls into the category of robotic tasks. We as a society have not done a good job in 2020 migrating away from those robotic tasks and focusing more so on the mindful tasks. So I think when folks like GreenCheck or DocFox or anybody else in the call here can focus on a specific set of jobs that need to be done, right? Work that needs to be accomplished, you can really dig deep into identifying what are those robotic tasks and how can we leverage technology to take those off of the plates of the practitioners, right? The risk and BSA officers. So primarily the idea of requesting and receiving documentation, that is not a mindful task, right? The idea of presenting what information is required and giving the end user an opportunity to provide that information is as clear as day a robotic task. And that transcends just the account opening documentation. It applies to the ongoing due diligence, but also sales and inventory data, right? The operational information that is needed to reconcile the banking transactions to the business transactions commensurate with the expected activity levels. So while you do need the decision-making power that comes with a career's worth of experience in compliance or BSA, you don't need the data science background that comes with extracting all of this data from disparate sources, normalizing it to a point where you can actually evaluate it and compare against the peer group or the predictive analysis that you've prepared in Excel. Right? Those are all examples of robotic tasks. But even on the mindful side, when it comes to actually decisioning on whether or not this is in fact a potentially suspicious activity, technology can't replace that training, that instinct, that purview that a human can provide, but technology can standardize the way that those decisions are made and ensure that those decisions become repeatable, transferable, right? So if other members of the team are in a position where they have to make decisions, it's in line with the bank's policies and procedures. And then that ensures that the efficiency will start to increase because you're not retraining or refamiliarizing yourself with the process each and every time you have to complete it. But it also reduces risk because now there's less opportunity for things to go wrong. So giving that airtime to standardization in addition to automation, I think is a really important part of the technology conversation.
Mike, if I can add to that, I think that then from the bank's perspective, it's really important to apply that lens when looking for any solution, which is to say that I really believe that solutions should be looked to help remove the administrative tasks and that burden, but not to be a silver bullet to basically enable the kind of the solve of everything. And I suppose what I mean by that is, we've been in many institutions where we do, for example, we do a lot of PEP and sanction screening as an example. There was recently, I think it was, there was recently a finding, for example, around and in fact, there all the time, there's findings around banks and institutions using a tool and purely just relying on the tool almost blindly in a way, and saying, well, the tool flagged it or whatever it may be. The reality is that there's tremendous effort that should be put into the idea of how you configure these tools, right? How they're configured. And as I was mentioned before, as an example, DocFox is configured according to your requirements, right? And your policies and your programs. We're not coming in to make a recommendation because we can't. We don't understand your world. We don't understand. I mean, we're not, we're not compliance experts either. But the point is that at the end of the day, one shouldn't look at a solution as a silver bullet which says, oh, the solution will tell me kind of like we're good to go or not. I would say that there's some great solutions out there to help streamline this process and to really help make it a lot more possible. But I don't want to undermine the effort that is still always required to bank high-risk accounts and the investment that will still be required in experience, in expertise, in leveraging that, like I mentioned before, in terms of reaching out, and in terms of a team to actually manage all of this.
And maybe start with Tony, but all of you, have you guys, when you are talking with various FIs as potential customers or customers, are you encountering resistance to automation or the technological services your group provides? And if so, what's your response? Just out of curiosity.
So I would say that we see probably more a couple of years ago than we do today, but when you are deploying machine learning and AI engines and things like that, especially ones that you have built in-house, there has to be a level of comfort. And so it really gets down to the granularity of helping them to understand, at least at a very high level, how these engines work, how they process 15, 20 million data points a week to help to understand where these are flowing. And so it's all education. I think one of the worst things that an automated system can do is black box, which means, yep, data goes in, it tells you what to do. If that is the extent that you're willing to engage with an FI, they're never going to get comfortable. You have to be able to get down to the granular level. This is what we collect. This is where we comes from. This is how we validate it every step along the way. And you foster that trust and then you show them it in process.
I think what we see is, obviously that education piece is extremely important. We're seeing for newer programs, almost everybody's now looking for some sort of technology solution. They see that there's an advantage in automating some of those robotic tasks. I think Mike defined that really well, so that they can focus on the judgmental decision making. However, where we're seeing resistance is those really old legacy programs. They may have a few hundred MRBs, and there are people that have figured this out before there was reliable automation to help them. And those people own those processes, those Excel spreadsheets, those reminders on their Outlook calendars, all things that are not super efficient and not very transferable, but there's a high degree of ownership. So it's hard for people to give that up and to switch, especially if they've had successful exams in the past. So that's where we see probably the most resistance. New programs, I think all of us have an investment model that allows customers to get in to these programs and grow with them. And so a lot of folks start out very small, and so they can't afford a big upfront cost. So it's really about the investment equation. I think we've all kind of figured that out.
I think the best tool for us is we offer independent model validation. So we do focus on education as well, but we're very transparent, just like our program requires our users to be. So we allow our financial institutions to validate our models just as they would any other BSA monitoring software. I think the other point, Tony, that you touched on is, migrating these sort of 1.0 manual models to an automated fashion. You have to allow for extensibility, right? And so the way a system is designed is typically the way that it's going to be most efficient. But as long as you can allow your users to adapt and embed their own requirements, their own way of doing things, their own expectations that they've already set with their customers, right, for years, sometimes longer, that's super important in order to ensure adoption and sustainability.
So all of you have said you work with some of the licensees at some point. How are the operators receiving your products and the interaction with the technology versus just their bankers or the old manual models, or maybe they had one-on-one banking services and that sort of stuff? How are the operators receptive to working with technology as well?
Yeah, absolutely. We've made it a big part of our mission to demystify the cannabis entrepreneur broadly, to help, our financial institutions, but also other industries in general, that, be it insurance or, payments, tax and advisory, right? These other sort of arm's length relationships that cannabis businesses have had difficulty obtaining. So one of the most exciting aspects of my day-to-day interactions with business owners is the level of trust that is instilled by seeing Green Check or either of your solutions as the bridge to banking, which they view largely as the biggest obstacle facing their operations. So I get questions all the time. Who do you think we should go with for our POS provider? Right? We're looking at this architect. Have you heard of them? I mean, the number of questions that we get because we're just viewed as somebody who can help solve difficult challenges in the cannabis industry has been really encouraging. And that's the type of relationship that you need, particularly in high risk commercial relationships, for financial institutions to be able to have that kind of experience that they can deliver for their customers.
Yeah, we've had the same experience at Shield, and I would say that's been probably one of the most enjoyable things, is empowering our bankers to have those sort of trusted conversations, move past sort of the compliance barriers to really having a true banking relationship. And there's a lot of satisfaction, not just for the customer, but for the banker, and being that trusted advisor. And when technology helps to link them together, it's been really great to see our bankers move beyond just BSA compliance to real relationship management.
There's a commonality, right, Tony? I mean, they're both regulated industries.
Right.
They're both dealing with an onslaught of regulatory change. They both have a compliance department, maybe,
yes.
that is viewed as a cost center, not a revenue generating department. I mean, they speak different dialects, maybe, but it's surely the same language.
Yeah, that's a great point.
So Adam, well, this is really for all of you, but go ahead and start with you, Adam, you talk a lot about the value of data and how to manage that for compliance. And so I'm just curious, what are some of the other unique uses of the data that you see?
Data in general, you're able to get a better idea of your market as a whole. So it's interesting to see how all of those factors bleed together: the businesses in your area, the demographics, the understanding of the needs of your community, and how you can apply that, how you can continue to further outreach. Additionally, the more data you have across your entire client base, not just the MRBs, is going to help decrease your compliance costs. It's going to make your teams more efficient. It's going to allow you to have more meaningful interactions with the communities you serve. And so I think that data, if you're only looking at it for compliance, not what can you use it for, how can you use it to grow your footprint, provide more value back to your customers, things like that, you are being a bit on the short-sighted portion of it.
I would say the data also, to add on to that, can help you to mitigate other risks. So let's take credit, for example. As banks start moving into credit, there are other risk elements. You mentioned title insurance, Scott. There's some other things around bankruptcy that impact these businesses. Whether it's perceived or real risk, it's increased. data can help you to mitigate some of those risks. We know a lot about these businesses. They share a lot of information in order to obtain depository services. How can we leverage that information to know more about the business and to help mitigate credit risk, other loss risk that may occur, and offer them more products and services, and still probably get, for the same credit risk, get a better yield. So I think there's some good opportunities for the bankers that also ultimately become good opportunities for the end customer.
And depending on the market, right, for folks in the line that may not be familiar, the level of data collection in the cannabis industry is certainly very high compared to other consumer packaged goods. So being able to rely on, less on inference and more on data and analysis, I think is a huge tool that absolutely needs to be included in your cannabis banking program. And so certainly look into what your state has dictated as the requirement for these seed to sale track and trace systems for license holders.
I just want to add in on that. So I think it's important to also dig in and understand the nature of the data. So I think that data points are very helpful, and I agree with everything that's been said so far in terms of needing to kind of integrate them to help to make a decision. But they're one aspect. The one piece that's important to be aware of is we've met some institutions who believe metric data is a central store of truth, or whichever track and trace system is used. I just want to be clear and just make sure that everyone's aware. The bulk of metric data is self-reported, right? So it's being reported from the systems essentially that are being used or utilized by the MRB. And so it isn't, just verifying, for example, data and transactions against, let's say, metric is not to say, well, then it's truth. What you're really actually doing is verifying the MRB's data against their self-reported data, right? Of course, that's a valid data point, but it is just one valid data point. And I think that what's really important is about, all of the analysis that you're doing in total. In reality, there is no single source of truth. And I think that that's important. So I just want to go back to what I said before. There's no silver bullet. Like no software will give you a perfect guarantee of doing this, and no software will automate and take over every piece of risk and every decision. I'd really encourage that. I think that starting a program like this is a combination of which technology is a very important part, but where experience, where advisory becomes a big piece, and what you're setting up in terms of your advisory capacity, in terms of external resources that you have, all of these are really important elements in terms of looking at this.
And just to add on to that, I think the more perspectives you can look at it, to Ryan's point, Metric or BioTrack or Leaf, those are one data point. But if you can see how an event occurs in several different systems, be that taxation, banking, their internal point of sale system, their utilities data, that's one of our favorite ones that we look at, you are able to get a much more complete picture of what's actually occurring, where it's different, where the differences actually mean an increased risk. Even between tax systems, local and state taxes, we see huge differences. Some of that is obviously intentional, some of that is completely accidental, but being able to view 5, 10, 15 different data streams all for the same event gives you a much better idea of the events that are actually occurring.
So we have literally a minute. So let me end this with this question for each panelist. What changes do you see coming to cannabis banking in the next 18 to 24 months? Nothing like an open-ended question to end a conversation. So maybe each person can give like one insight, and let's start with Tony, and we'll work our way around.
So what change do we see over the next 18 to 24 months? I see the possibility of safe banking at some point in that time frame passing, which will increase access to financial services. When in that 18 to 24 month window, I'm not willing to guess, but within the next 2 years, hope there's better federal recognition of the banking that's already happened at the individual state level.
Mike?
Yeah, I mean, I think who knows what happens in Washington, right? So I'll take an even further approach than Tony, but I will say that, we talked to a lot of examiners, and examiner expectations are becoming more mature and starting even to standardize across states, which is really encouraging to see. So I think the regulators' expectations will continue to evolve, but hopefully start to stabilize as more examiners just have more time in the field looking at these programs.
Adam?
So I would actually build on that. I would say that the regulators are getting more sophisticated. We do a decent amount of work with them through our regulatory work. And so I expect to see more action from the regulators, both good and bad. We've already seen that on the payment side with a decent amount of action going out with some of those rogue operators and things like that. So the bar is ever increasing. And so I believe that as the regulators get more comfortable, their expectations will be raised and they'll have a lower tolerance for out of compliant programs.
And last and definitely not least, Ryan.
I'd probably say that there's going to be more banking, right? And so I think that as there's more banking that happens, I think that you're probably going to see some price pressure on the cost that essentially banks can charge these MRBs. And so I think that as some of those prices are likely to come down, I don't know how soon, just because of the market, I would say that it's important, therefore, to think about scale. How scalable is one's cannabis banking program that you're setting up in terms of your cost structure?
And let me just add one thing to that, Ryan. I think as prices do come down, the financial institutions that are in this space are going to need to start thinking about alternative sources of revenue to support their entire cannabis program. So that I think we come full circle. I think, Tony, you started off our discussion about talking about how FIs are looking more and more into lending or other types of complementary services. And so I think the two go hand in hand as the price compression occurs with respect to just depository services, other services will need to take its place in order to support from a financial perspective the entirety of their cannabis program.
Absolutely.
So anyways, with that, for Katrina and myself, we would like to thank all our panelists. This has been great. We probably could sit and talk for another hour and a half, but unfortunately we have time limitations. I want to thank our audience. Certainly want to thank Katrina. To the extent folks have questions, we are out of time, so we will provide email responses. But certainly if you have follow-up questions over the next few days, feel free to email and we'll get to the panelists and hopefully provide further education. Katrina, any last words?
Yeah, I would just like to encourage everybody who's still exploring or has other questions about this space to reach out to us. We're happy to be a resource, but also reach out to these gentlemen because they are amazing resources and they have so much insight, again, for what they're seeing throughout the country. And typically I have found them to be very generous with their time. So just encourage you guys to just just keep going on the process because it's not an easy one, but you do, like Ryan said, need advisors, and it does take a village to do cannabis banking. And so thank you again for attending, and thank you panelists for helping us out on this one.
Thanks for having us.
Thank you.
Bye-bye.